You are welcome to Business Lens on Rapid Television Abuja, and it is great to have you with us on this edition. So let's begin with the key business trends that matter right now, starting from the headlines. The Federal Competition and Consumer Protection Commission has commenced phase enforcement of sanctions against digital money lending operators that failed to regularize their operations in line with digital, electronic, online and non-traditional consumer lending regulations 2025, as compliance deadline for affected operators expired on Monday, January 5, 2026. And on the next, oil marketers under the aegis of the Petroleum Products Retail Outlets Owners Association of Nigeria have asked the federal government and the Nigerian National Petroleum Company Limited to provide a definite, realistic and workable timeline for the revival of Nigeria's refineries. Moving on to the next one, where the Center for Promotion of Private Enterprise has urged the government and policymakers to prioritize health interventions over imposing additional taxes on sugar sweetening beverages, warning that a sugar tax would undermine Nigeria's manufacturing and employment base. To the next story that says the Debt Management Office, the federal government is heading back to the domestic debt market later this month with plans to raise 900 billion naira through the reopening of 3 federal government bonds. And to the next that says non-oil exports climbs to $6.1 billion, which went up from $5.4 billion in 2024, signaling an 11.5% growth and a clear sign on the push to reduce reliance on oil. Away from that, the Central Bank of Nigeria, CBN, has reported an improvement in credit availability across key lending segments in the fourth quarter of 2025, even as lenders recorded higher default rates on loans to households and businesses. And in the markets, the Nigerian Exchange Limited closed Wednesday's trading section on a positive note as equities gained marginally amid broad-based buying interest that lifted market capitalization by 6.88 billion naira, as the all-share index inched up by 10.77 points. I am Divine Alex. We will look at these stories and more after the break. Stay with us. You are welcome back. This is still the Business Lens on Rapid Television Abuja. I am Divine Alex. Joining me today is Cyrus Ademola, who is a financial and economic analyst. Cyrus, you're welcome to the show. Can you hear me?
Good morning. I can hear you.
Okay, good morning to you too. It's great to have you on the show today, this morning. Now, let's get into it proper, right? Now, as Nigerians juggle daily expenses, investment choices, and the occasional sugar craving, the economic landscape is showing some interesting twists this week. Yes, it's been, something really interesting. Now, we're going to be moving from the cracking down on rogue digital lenders to calls for our refineries to finally wake up. Nigeria's economic scene is full of movement this week. Non-oil exports are quietly climbing. Domestic borrowing is back on the agenda. And the sugar tax debate is stirring both wallets and jobs. Even the stock market is flexing with small gains. Now, that is where our conversation is going to be centered on. And I'm going to be starting with the FCCPC, which is the first one. Now, the FCCPC has begun enforcing sanctions against digital money lenders who missed the January 5 deadline. What do you think are the potential risks for consumers and the fintech sectors if these operators continue to flout regulations?
Yeah, okay. Thank you so much for having me again. I think FCCPC is within its right, to determine how the regulatory environment would be for, digital money lenders, for fintech, for the people that operate within the space. That is their mandate. And I also believe that, them going after them with the, call it the stick approach, it's a good thing and a step in the right direction because Many of the digital money lenders that we have in the country, many of them, I know they leverage on the fact that we're still very, very unregulated. It's an emerging sector. And then so you see issues like loan shark, still being a very big issue, people taking advantage of people's, let's say, economic vulnerability. And also, they also leverage on the fact that some people also take advantage of people's private data and things like that. So for them to see this as an issue worth considering and looking at, so it's a step in the right direction. And like every sector, every emerging sector, you see all kind of um, distortion, imbalances, then the regulators step in to provide some kind of balance and then formalize the sector. And then you see the guys that just want to cash out in the system being win out, and the people who actually want to do good business and provide quality service to consumers or to people in general, being able to maintain and ensure transparency and good compliance. So for the FCCPC, we'll see how that turns out. FCCPC in recent time have not really been, what they used to be, but them coming out to say that they're going to go after those who are not yet regularized, it's a step in that direction.
Okay. Now, you know that it was during the time you just mentioned on loan sharks that I just remember that I've had situations where we had people come out and say, oh, I don't know who borrowed money with my number, or somebody who maybe must have used me for anything. And then somehow I'm getting messages, notifications saying that, oh, do you know so and so person? This so and so person is owing so and so person, is a total amount of this. Do you think that this whole step, this new development is actually going to, limit these issues that you don't just wake up one morning and you're seeing somebody sending you messages like that, saying with a picture of the person who probably borrowed money and they're asking you for information about that person?
Yeah. I think recently I would say will I say, distortion has reduced significantly in that sector. Many of the fintech, and that thanks to CBN. Remember, there was a time that CBN had to stop or pause operation of fintechs to look at them and see who is who and what they are doing. And then they have to disbar or take away some licenses from some fintech and some lenders and some loans. So CBN has done so much in clamping down on that, but there's still some few ones. Nigerians are desperate. There's huge economic vulnerability, and people will see that as an opportunity to take advantage of people. So there's some few ones there, and it's also speak back to the law of data privacy, right? Data regulation, how people's data is being managed and being protected. And these are places where FCPC and other regulatory agency comes in. And so for them to be emphatic about this, like I said before, it's a step in that direction. It might reduce it, but the bigger issue would be to have a more formalized, fintech where people know what is what and who is who. It happens in the banking sector, and now today we have a strong banking sector for that. So let's see how it plays out.
All right. So let's dive into this, right? Because this is interesting. Now, oil marketers under, Petran are calling for a clear timeline for refinery revival, considering Nigeria's current energy needs and subsidy dynamics. What realistic steps should the government take to make this a reality?
That's a big one, because the issue about the refineries in Nigeria, like the Nigerian state-owned refinery, is one that it's the issue of the more you look, the less you see. And so all the time we heard that NNPC was looking for partners, and to work with them and to help revive and revamp the refinery. Sometimes early last year, there were conversations about the refinery working, and then we're told that it's no longer working. So it's a very, very dicey one. People in the industry, sometimes when they cannot tell you, as a matter of factly, what exactly is going on. But what we know for now is that the refinery has remained moribund. They are not working, the four refineries in Nigeria. So why the petroleum marketers or the oil marketers may be saying that the government should give them some kind of timeline, the question is that does the government themselves even have a timeline, on getting partners? Because this is an issue of capital. It's an issue of raising capital, competency, and as well as having good technical operators to help revive the old refinery. So I think it's optimistic or idealistic for them to say they want, some kind of timeline, some kind of deadline. But given how complicated the situation is, I don't think it's going to be possible, for government to say that. If you ask my opinion, I would say that the time is due. I haven't spent over $3 billion in rehabilitation, in turnaround maintenance rather, and rehabilitation of the refineries, and they are still not working. I think it's due. It makes fiscal sense. It makes economic sense for the NNPC and the government to find people or partners that can actually buy some stake in the refinery and get them working, and there can be a kind of a joint venture agreement where the government can have their own share, and then the operator will be the one in charge of the refinery. Because as we speak today, it is becoming evidently clear that NNPC may not be able to handle those refineries themselves. And keep in mind that NNPC is a very widespread, will I say, a very sprawling company that wants to do so many things. Okay. So they have joint venture in the upstream sector, they have joint venture in the midstream sector, they are into pipeline, they are into logistics, and they also own petrol stations. That means that's a lot, a lot of portfolio in their assets, a lot of assets in their portfolio rather. So for me, I would say winning back and taking back the role more dominant in the upstream sector, and allowing those who can operate in the downstream and midstream sector take charge of those refineries while still maintaining some certain kind of equity, like we did in the power sector, like we did with the discos. Right now, the government retains 40% of the discos, but the main operators are those who have the expertise and capital firepower, to operate them. So we can replicate that same template with the refineries, because I don't see in any near future where the refinery comes to life and NNPC is responsible.
Okay. Now, that is interesting. Now, let's look at the Center for Promotion of Private Enterprise, because they were, they had something to say on sugar tax, right? Now, these people have come out to say that, a sugar tax could actually hurt manufacturing and employment. What do you think of this?
Sugar tax was introduced by the Buhari administration. It's one of those funny, regressive taxes whose reason, or will I say, rationale for implementation do not really make much sense. Like the carbon tax, is it the carbon footprint tax, the 5% tax on whatever carbon emission that they did, and other kind of taxes that was implemented during that time. It's one of those battles or one of those issues that we have with the government in terms of how they approach taxation. One of the things that the administration did, during huge revenue fall because of COVID and oil price drop and global economic turmoil, and they try to gear up revenue through different means. And one of it is, enforcing different kind of taxes that do not really help matter and only hamper productivity. And something about government policies is that it's easier to implement, it's harder to roll back. So now that probably we are in a different economic situation, it makes sense I don't think we should be having a 10% tax on every 10 liters of beverage that we consume, and that's not fair to the consumer. It doesn't in any way help the industry and the manufacturing themselves. So I think it's a good call. They should listen to that and try to get rid of it. That would be my own position.
Okay, now looking at the same CPPE thing, right? How do you think policymakers should balance public health priorities against economic growth in Nigeria?
Yeah, I don't. Just that's the thing. I don't think the sugar tax or any of the other taxes, the rationale does not make sense. Having to do with public health. When we talk about public health, we already have health agencies that help look into the. We have the NAFDAC, we have the SUN, we have other public health agencies that look into the issue about public health. When it comes to consumer or consumption, it's about quality delivery, right? Quality assurance. What are you putting in your packs? What kind of medicine are you selling? What kind of food, are you selling? Is there carcinogen here? Is the sugar content too high? Is the sugar content too low? Those kind of issues, right? That help, regulate these things and pull it. That's nothing to do with sugar tax. And one of the study that I did, in terms of comparing, the diabetic level and then the implementation of sugar tax, it doesn't change, right? But I'm not saying that it ought, but it doesn't help. So it's the rationale does not just not make sense. If there's no way you want to look at it, the rationale does not make sense. It's just a way for the government to get money. And
Okay.
they're not really getting much money from it, by the way.
Speaking about the government getting money, let's look at the report from the DMO, which is the Debt Management Office, that is now talking about plans to raise 900 billion naira through reopening bonds, right? Now, could this push the domestic debt burden higher? Do you think it's going, this
Yeah.
whole thing is going to like push it higher? And what also do you think this is going to mean for investors and the fiscal space in Nigeria?
Yeah, most definitely, because you start from the budget framework. The budget already has a 23 trillion naira deficit. So that means the amount the government wants to borrow. That's the amount they're going to add. I think it was Carlo Aja who made it clear, who made the analysis that for every month they're going to borrow 2 trillion. And one of the ways that they're going to do that is through the capital market. So they issue bonds and treasury bills and commercial papers and things like that. That's one of the ways they're going to get those money. And of course, the bilateral loans, from world banks and other alliance. So it's expected that to see all those kind of aggressive bond be issued. Now, to the question on how will it affect the debt portfolio? Yeah, on the part of the investors who operate in the capital market, the financial market, they don't have any problem with that. Government bond is the most secure bond that you can purchase. And at a very high rate, given the inflation that we have. Nigeria has like a 27% NPL. And so government investors don't have any problem. They'll keep cashing out on it. So it's a good deal to get government bond 6 months, 1 year, 2 year, and get your percentage upfront. But on to look at it from a public finance and balancing the book and ensuring that you have, don't put too much pressure on inflation and your spending is within reasonable target. I don't think the government is doing, I don't think they're taking it serious. Probably they are betting on the tax revenue to help offset all this spending, but we'll see how that plays out. But I don't think the government is being serious about how they are spending money.
Okay, it's
very alarming. It's very alarming.
Okay, so what do you think? Like, what effect do you think this is going to have on, our fiscal space?
Yeah, so people are saying that the most projection is that by Q2, Q3 2026, we're going to start seeing the effect of tax compliance, and that will help spur revenue growth. Yeah, I can agree with that, but one of the projections also that oil price is going to go down a bit. So some of these things might be the buffer that the government would use to help offset all of this revenue shortfall. We'll see how that goes, but the way I see it in terms of public finance, I don't see. We need to dial back, right? I would say we need to dial back. For one, government needs to put some of their expenditures. They need to cut back spending. They need to ensure that because if we don't get bilateral loans, right, and we don't have higher subscription on our bonds, what we are going to resort to is ways and means. And what that means is that we start printing more money. And we've done that in the past years. It doesn't always end well. And so if you are going to the wrong direction, the best thing you should do is to put your leg on the pedal and try to slow things down and go to a different direction.
Okay, now let's shine light on oil once more because non-oil exports jumped to $6.1 billion in 2025. Now, this is way up from the $5.4 billion in 2024, which is the year before. Now, when you put these things, in context, how significant do you think this is for Nigeria's goal of reducing oil dependency?
Yeah, you might find that I don't really believe the numbers that is being put out by I don't know their name now, but I
Mm,
know they are a lobbying agency for non-oil export.
mm-hmm,
So I follow MBS number more closely than I do some of these guys because they are just
mm,
trying to make a point. But
okay.
even at that, 6 billion, 5 billion doesn't really matter. If you look at the foreign trade data and the foreign trade report,
Mm-hmm,
oil oil export or oil-related exports still account for about 90% of what we export. So those things don't really move the needle, right? So if you don't pump out more oil, your economy is it's not going to survive.
mm,
When oil catches cold, when oil season, our economy catches cold. So we've not done enough in infrastructure, in productivity, in refining product, adding value to product to ensure that we are a bigger player in the export market. Right now, we
mm,
are not. We literally export raw materials like crude oil and
mm.
like seeds and things like that. So I'm not impressed. I'm not impressed with the numbers. I just feel like if you look at if honestly if you look at the data, right,
Mm, mm-hmm,
nothing has changed significantly in terms of non-oil export because
okay.
we are not doing the right thing. There's so many things that we are not doing that is not that it's not helping, right?
Mm.
So yeah, let me just put it that way. I'm not impressed.
Okay, you're not impressed. Now, this is not the first time that we see people come out and say, "Oh, we are not doing enough," But most times they don't really like go out of their way to explain where they think that should be touched. Now, this is now bringing me to the next question, same on the same topic. Now, from your perspective, especially as you're not impressed, which means that you are expecting more. Now, which sectors do you think are leading this growth or should lead this growth?
Okay, so number one is trade, right? Trade is a very, very big part of our economic framework, and that is
Mm-hmm.
agriculture. What I'm more impressed is that if you look at agriculture contributes about 20% of our GDP, right?
Mm-hmm.
Huge labor, huge workforce. But what kind of agriculture do we do in Nigeria, right? We do the old, traditional kind of agriculture whereby you plant seed, you wait for it to germinate, you harvest it, then you sell it, right?
Yes.
In terms of storage facilities, we do not have. In terms of logistics, we do not have. In terms of refining these agricultural products and adding value to them, right? Making your tomato into tomato paste, making your cocoa into chocolate, making, those kind of stuff, right? Not just sending gari and sending sesame seed to Europe. No, you refine them, you create more jobs, you
Hmm.
domesticate the industry, and then send some that is refined to other markets, right? So that's why I'm not impressed. We've not had a situation where we have a government that is serious about having value-added goods, and then refining them and sending them to market. Because this is how you become a bigger player, right, in the system. In
Hmm.
terms of trade, you cannot have inflow or outflow of trade exports without having import, right? So
Hmm.
what we've done over the years is that we're trying to protect local economy or local industries at the expense of the local industries themselves, because
Hmm.
we are putting all of these huge tariffs on import of materials, on import of expertise, on import of
Okay.
capital that could
Yes.
help drive local production.
Hmm.
And then at the same time, we are saying that we want local production to grow, right? If
Hmm.
you ask anybody doing any business in Nigeria now, export business in Nigeria, one of them will tell you is that they don't pay export tariff, they don't pay taxes to export things, but they will tell you that one of the biggest challenges that they have today is that the things that they use to produce and make those things are very expensive because when they import them, the tariffs on them are very, very high.
Hmm.
So you cannot say you want to export significantly without importing significantly. It goes both ways. It's both. And lastly, I would say, because you mentioned why I'm not impressed. Lastly, I would
Hmm.
say energy cost. Like alternative energy cost is still very high. Whether it's solar, whether it's diesel generators, those things are still very, very high. So and that the government one of the role of the government to provide electricity, because the large scale, nationwide investment is not something that one person can do.
Can
So
do,
of course, the
yes.
government have to work with private operators like that. So get energy right, get the trade policy framework right in terms of import and export. And the last thing I talked about is refine those products, make sure that you have a value-added goods that you can export so you can become a competitive player in the export market. It's not just, talking about volume or numbers. That's not the way it gets done.
Okay, thank you so much. Before we move to the next question, which is on CBN reports on the quarter four of 2025, I wanted to note this that because you mentioned tomatoes, tomatoes is really cheap right now in the market, so you should just go get it because the big basket, I think, it's around, let's say 10 to 16 or 18,000 naira. Good tomatoes, the wicked tomatoes or whatever they call it, but those thick ones. So I think this is a perfect time for them to just go into, even though you're not impressed with the energy things and the rest of them. So let's go on this quick break, and when we come back, we'll look at the CBN reports for the quarter four of 2025. Stay with us. You are welcome back. This is still the Business Lens on Rapid Television, Abuja. My name is Divine Alex, and you are, and I am, doing the show with Cyrus Ademola, who has been with us discussing some of these topics. And like I said before we went on the break, that we will be looking at the central bank that has reported an improvement in credit availability across key lending segments in the fourth quarter of 2025, even as lenders recorded higher default rates on loans to households and businesses. All right. Now, Cyrus, are you ready for this question? Because as CBN are reporting more credit availability in quarter four of 2025. Now, but there's also this higher loan default, like we talked about earlier. I think we hinted it when we were talking about the earlier conversation. Now, if you were to come in, right, what strategies would you recommend, for banks and central bank to adopt to encourage lending while managing rising credit risk?
Yeah, okay, it's a big one. Thank you again. I feel like when it comes to the loan default, you have to look at the sector that is targeted, right? So the last report I checked on the highest, loan, people who get more loan from the banks, the government is one of them, the trade sector, the oil and gas sector is one of them, and each sector has its own challenges and its own, well, I say, problem. So, and its own risk factors. What are the risks, in getting, in borrowing or lending these guys, money. So, but from the individual level, I would say one of the problems that we have is the NPR rate, like the borrowing rate in Nigeria, the lending rate rather in Nigeria is still very, very high. If you are going into the banks and you're getting your loan for 30%, of course, you don't have a choice because you have to get money somewhere. But paying back 30%, where the average global is like 6 to 7%, right? That's a lot of money to pay back. So, and then you take that money, you invest in an economy that is very volatile, an economy that you may not get the reward back, as soon as possible. That's a very high risk factor. Huge inflation climate. So when you have that kind of situation, there's high form of credit risk, right? And it's reflected in our global credit rating and whatnot. So for the part of CBN, it's always going to be regulatory compliance, making sure that loopholes are being mended. And on the part of the fiscal side, it's just making things comfortable for people so that people can, there's a
Feel the impact.
enabling environment where people know that, yes, there's a good ROI if I take this risk, if I invest. Not that people don't want to pay back. It's just that sometimes the whole climate gets so difficult, and
For
before you
them.
know it, you're in a debt
Yes.
trap.
Okay, now let's look into the markets just for a moment, which is taking us to the Nigerian exchange that recorded marginal gains yesterday, lifting market capitalization by 6.88 billion naira. Now, if we are to look at, because if we are to compare between Monday, Tuesday, right, you see that there's a slight difference between those 2 days to yesterday. Now, Does this signal a broader investor confidence in the markets, or do you think this is just a short-term activity, or it's something that could be sustained? Now, maybe this momentum will keep going with this momentum. What do you make of this?
Well, nobody has a crystal ball on what exactly,
To
would happen in
expect.
the market in the long term. Yeah, so we can only make certain predictions. What we've seen so far, there's a lot of divestment going on, there's a lot of deal going on. We saw the Geregu Power Femi Totola exit, from the capital from Geregu, which had a huge capital inflow into the capital market. We saw the Air Odin deal with Sepla. Sepla is a listed company, in Nigerian stock exchange. And so there's a lot of deals going on. We saw PS Cousin saying that they're not leaving Nigeria, they're going to reinvest in the country. So those kind of equity with commitment of capital to the country, those are good things. And those ones, they signal long term because these are real investments. So on the type of portfolio investment, I've not checked the recent figure, but what I've seen is that the last quarter there have been a kind of drop, maybe due to the fear of capital gain tax, which we've spoken about heavily, and that's falling on different deaf ears. Maybe because people have not begun to see the impact anyway. So I'm not
Now,
optimistic in that direction.
okay, now let's interlink debt, because we talked about debt a little bit, and the market, because I want us to interlink both of them together. Now, market performance, right, given the upcoming 900 billion naira bond issuance and current market trends, how do you see the government's borrowing influencing investor appetite, as and at the same time the equity market performance in the short term?
So what we saw in 2023 was a very high inflow, a very upswing in the capital market in 2024. And it makes sense. First and foremost, we have a change in government. A change in government that signals a more liberal economy, which a lot of investors catching into, like, okay, this is a different government with a different body language, with different, language that it speaks better to investors than the previous government. So a lot of people cash out, a lot of people brought in their money and bet on the Nigerian economy. That's one part of it. Also, we saw, high interest rates, better than many emerging market that helps, drive the market. So those are the kind of things that help drive, the market in the last year, last 2 years. But now things are stabilizing. The government has been there for 2 years. NPL may be dropping soon. We saw a report yesterday that some NPL committee members are saying that they voted for drop in NPL rates, and other things are coming. So there's a lot of stability. And investors, when it comes to hot money inflows, investors don't really like that kind of stability. They like things in Russia and stuff like that. So we may go back to the normal, and we'll see how things play out. On the part of borrowing, bond, it's also part of the capital market fundamental. So what you will
Okay.
see is that there'll be a lot of people, Nigerian bonds still have huge credibility. So there might be a subscription and oversubscription of it, which also infuse capital into the market. So that's a good thing for the investors, And on the part, like I said, the part of the balance sheet, that's where the edit comes in. So, like I said, nobody has a crystal ball, but the market fundamental right now speaks of stability. So those who are not just cash in, cash out guys, would stay. But in terms of volume, in terms of capital, what does that really mean? It means that we may not get much money in portfolio investment, but in terms of long-term equity investment, they may be, committed and serious investors. So it's both ways. There's no way to say that it's going to be this or that, except something disruptive happen in the market that people do not foresee.
Okay, thank you so much, Cyrus Ademola, for being a part of the show today and joining us to have this conversation today. Now, that is it on the Business Lens today, being Thursday. Join us again on Monday at 11 a.m. where we talk about your money, track the market, and the rest of them. Now, my name is Divine Alex. Thank you so much for watching.